Ismail Taiwo, Research Associate at Anchoria Securities Limited, joins me for more on this. Thank you for joining us today on the show.
Thank you very much. Thank you for having me today.
All right, so I mean, H1 has come and gone, but what are the major stories for you from H1?
Okay, thank you so much for that question. So I will start that by talking about our H1 report, which talks about the midpoint and positioning for the second half. So we delve into our different macroeconomic indicators. Starting from the GDP, we saw that GDP increased in Q1, that is by 3.98%, and we look into those sectors that actually improved the GDP. So we saw the financial sector, the service sector, agricultural sector also did well, oil and gas slowed down marginally. And after that, we look at the inflations. We see that inflation has been moderating, but checking it from January, we see it has been coming down, though the last inflation figure actually came down just marginally. And also, we look at our external reserve, we see that it's actually performing. We are earning from different oil earnings and different external sectors. And so our economy itself at large has been actually performing well. So we see that going to H2, we should expect strong fundamentals in the economy.
Well, you talked about H2 and you're talking about being cautiously optimistic. Why is that?
Yeah, well, we're going to start that by the inflation. So we see that inflation came down marginally. That is 2 basis points. So we don't see that at something that is actually very large or something that is actually very strong. Let me put it that way. And we see the recent MPC that was done on 20th and 21st of July. We saw that the CBN retained the MPR still at...
and that aligns with your projection anyway.
That's aligned with our projection.
So for your projection, are you saying that's going to continue to the end of the year? Is that what you're saying?
Yeah, we're very optimistic with that it's going to continue to the end of the year.
Why?
If we look at the indicators, let's go to subnationals. So average, the national inflation is currently around 15.91. Going back to subnationals, 17 of the 37 states in Nigeria, they are still currently experiencing high inflation.
30.
So sorry?
No,
so 17 of the 37 states, 19 of them, they are still currently experiencing high inflation. The highest, I think, is Imo State, which currently have more than 40% at inflation. Go back to Kogi, go back to the like of Abuja. So all of them are recording inflation above 15.91% of the national average.
A good number have over 30, actually.
Yes,
over
exactly.
30%,
so
yeah.
That means that we should not be we should be very cautious of how we actually want to think about.
So let's look at this now. So a situation where the general headline inflation is 15%, but when you then take a look at what we have regionally or what we have at the subnationals, we're seeing over 30%. So what policy instrument are we going to probably attack, or what policy instruments are we going to use to attack that?
Okay, so looking at it from the monetary policy stance, we see that the monetary policy have been cautious with how they actually reduce the MPR. So as we are not losing the investors' confidence in the market, because if we go back to the fixed income market space, the equity market space, we've seen a lot of capital inflow. So I think the investors are actually benefiting from the yield in the market. So I just see that the monetary policy committee, like the CBN, for instance, needs to be very cautious on how they actually tame down their MPR so as not to affect the investment landscape.
That's quite interesting. I mean, I was going to ask you which one should we actually be paying attention to? Is it the 15 or the fact that a good number of states have above 30% inflation rate? But away from that, we see that the government is also trying to do a thing or two to address that. Let's look at some other things now. With the MPR staying at 26.5%, what are the implications? Because a day after that particular meeting was held, we saw some people from the private sector saying this is not good for business. We've been on this for a while, When are we going to have that balancing act?
Well, thank you for that. So we see that there is actually two stands with that, looking at it from the private sector and how they're actually creating employment, because to access a credit is actually very high. Accessing credit is currently around 30% now, given that the MPR is around 26.9%.
26.5.
Sorry, it's about 26.5%. So having that at 30%, it's kind of a way big burden for the private sector. But then we still need to protect our investment landscape. We still need to protect the foreign investors that are coming into the market, and how they actually react to the market, because we see them having a lot of confidence in the market, in the Nigerian market.
So how do we then build the confidence? No, we don't even need confidence. What we need is our pockets fatter. That's what we need. We don't need confidence.
Well, I would just say with that too, our pockets is actually getting fatter.
How? Yeah, yours is getting fatter, I guess.
No. Like looking at the general economy at large, it's getting fatter because we are seeing investors coming into the market. We are seeing foreign investors coming in.
Foreign investors coming into the market. The consumer, the Nigerian on the street, are they doing better?
Well, with that, we believe that things is actually going to start easing as well.
Okay.
And as things gradually coming up, we see them actually easing the NPR as well so that it can contain the private sector. And, you know, they do a lot of things in the economy to actually contain it. So we see that going forward as well, though our projection is that the NPR may not actually come down below that.
Interesting. So let's talk about inflation. I mean, we talked about NPR, which of course is expected to drive down inflation. But let's talk about inflation. What's your expectation? I do not think the CBN is still looking forward to a single-digit inflation. I don't think that's, maybe it is, I don't know. But what do you see? Considering what's happening now, Houthi, they are beginning to attack, you know, at the Red Sea. And then you also have the 12th consecutive night of attack coming from USA. And you also have, what's it called now? Iran. They have a lot of all this happening. What's the implication on inflation?
Well, let's look at this from this angle. Looking at the geopolitical space, like you just said, the Iran and US war. So we see that the war has actually started again.
All over again.
Given the fact that they've been trying to make some resolution before, and we are still expecting that they come up with a kind of a good solution.
You think that's going to happen anytime soon?
Well, we may not say it's going to happen anytime soon, but we see them talking. We see them dialoguing. So we see that once it comes down, it's going to ease something. Currently, the crude oil, Brent crude is currently selling at 96 cents. Or
$96, yeah.
Per barrel. That's a kind of a way very high, right? So we see the cost, we see the implication on the economy, you know, the transportation cost, you know, cost of transporting goods to, you know, to the market and everything. But we see that by the time all this geopolitical tension actually ease, things are going to, you know, come up good and inflation will start easing.
You know, it's like a double-edged sword for Nigeria anyway. As crude oil prices go up, it's sort of good for us in terms of earning. But does it even translate? Exactly.
It's actually affecting the populace in that way. But the earnings of the government is actually increasing from the crude oil. But we believe that by the time they actually settle, you know, they come to the table and they make a very good dialogue, it's going to come down. And the people as well, they're going to feel the benefit of that.
But we just talked about external factors. What about local factors, domestic factors? Do you see any that might affect the trajectory of inflation? 2 basis points reduction after 3 months of, you know, upward movement. What do you see moving forward? And what are the domestic factors that could be responsible for that? Well,
what we are seeing now is that that 2 basis point is still elevated, right? That's the first thing. So the second thing, let's look at the supply. So we've seen a lot of security issues that we are actually experiencing in Nigeria. The case of bandits, you know, kidnapping people, the farmers are not able to go to the market and do farming. So all this together is going to keep the cost of food, actually keep it increasing. So we are expecting the government to also come in, you know, do the security, you know, all things that are supposed to do need to be done so as to keep the inflation down. And to quote, what is actually driving the inflation more is actually the food inflations. And we can see that from the farmers. They're not able to farm, they're not able to go to the market and all. So we see it easing once the government actually do enough interventions.
Once they do enough interventions. Anyway, they've sort of talked about a lot of things they're doing. I think we should just give them some time and see how these things will pan out. Hopefully, they would pan out well. Now, you expect about 15 trillion naira in, you know, additional government financing for H2. Talk to us about the implication this sort of has on interest rates and then private sector access to credit and just the economy at large.
Well, to that, we know that looking at the budgets of the government, you know, they need money to actually finance the deficit, and they are raising that through our external financing. So they can also raise that through the internal financing as well. That's talking about the bond market, the T-bills, the OMO as well. So we are just seeing that that is going to let them meet their obligations, their expenditure in terms of capital expenditure, in terms of infrastructure they actually want to build. So that is, in one way, it might actually lead to ease from the populace, you know, doing what they're supposed to do, creating additional facilities, building enough infrastructure. So that is the first way. The other way, that's going to increase the money supply, because we know that money supply is actually one of the factors that actually used to cause inflations. But then we can look at it from which one has the high impact. Is it actually impacting the people? Is it actually the inflations or the money supply that is going to keep increasing that will actually affect the market? So we are going to tilt towards, building infrastructure with that, increasing the standard of living of people. So that is how we actually see that, common.
All right, that's quite interesting. Let's close this with this particular one. If you have to describe H2 in one sentence or maybe one and a half, what would you say?
So it's going to be a very fantastic one. So that's what I'm going to say, because we see the elevated dividend yield in the market. We see a lot of participation in the market. Even domestic investors, they're actually participating in the equity market space. We have them up to 93% in the market. In terms of foreign investors in the equity market space, they're just about 6%, as the situation of FTSE will actually come up, reviewing the classification of falls from unclassified to frontier market. So if you see all those things, we see that people are actually trooping in, coming to the fixed income market. We see it has been performing. OMO have been oversubscribed. TUBs have been oversubscribed. And we are seeing all these things going forward to the end of H2 2026.
All right. Thank you so much for coming on the show today. We appreciate your time.
Thank you so much.